Mortgage rates are a little different than pretty much all of the other rates, right, on how they're calculated. And mortgage rates loosely follow the 10-year Treasury bond yields.
Welcome to the RE Real Estate Podcast, where we discuss buying and selling real estate in black and white. Here are your hosts, Ben Harang and Clint Galliano.
All right, everybody. Welcome to another episode of the RE Real Estate Podcast. I'm Clint Galliano, your host, and our other host is Ben Harang. Hey, Ben, how you doing?
Clint, I'm doing terrific, man. How you doing today?
I'm doing wonderful. Looks like today we got a guest.
Whoa, there's three of us out there. That's a first for us. We have with us today Mike Domangue with Hancock Whitney, who's a mortgage loan officer, and we're going to talk about the mortgage business a little bit. The interest rates seem to be trying to go down some, so we'll get Mike's take on that, and we'll see where it goes. Where we're going to start, Clint?
Well, let's let Mike introduce himself. So we'll borrow something from the Life, Real Estate, and Everything podcast and say, so Mike, you were born and then what?
Well, I see we're all on the same journey. All a little follically challenged here, so maybe that's how I got the invite. I fit in with the theme I see. You know, I'm from Houma, Louisiana, born and raised here. To start off, I did a little bit of management as a young man and got into consumer finance, you know, early 20s, probably 19, 20 years old. Transitioned for a brief period in the y'all world of real estate. And then from there, I was picked up. Someone said, man, what are you doing, you know, in real estate with all that financial background? Was brought on, hired as a mortgage loan officer. And that's kind of been where I've been ever since. But at this point, close to 30 years of, in finance and consumer finance, some sort of banking, mortgages, or consumer finance. And I work with Hancock Whitney now as a mortgage loan originator. And love it. Love the industry. Love the real estate industry as well. And one of the things that I've always wanted was to be able to use my skills and my abilities to help others. And this is a place where I could do that. So it excites me every day, man. I love coming to work. There's always a new challenge, as you guys know, even with y'all. There's a new challenge every day, and it's exciting. And it's very rewarding. So, yep, that's a little bit about me. Nothing too super cool.
Okay.
Awesome.
So we were talking about rates, and I keep saying that they're trying to go down, they're trying to inch down, and there's always some resistance, but they're higher than they were a year ago. But it feels like there'll be some rate cuts coming, and like we talked about, the future rate cuts are baked into the current 30-year fixed rate home loan rates. So just kind of tell us where we are on a conventional or an FHA rate today.
So mortgage rates are a little different than a lot of the pretty much all of the other rates, right, on how they're calculated. And mortgage rates loosely follow the 10-year Treasury bond yields. And just a little background, a Treasury bond is basically you loaning the government your money, and they're going to pay you back the money you make on that. The money that you're going to make off of allowing the government to borrow your money, that's where the yields come into play. They use the 10-year yield to base mortgage rates because the average mortgage is in place for 7 to 10 years, roughly, is the average. So that's kind of where they base that. And as far as the numbers being baked into looming Fed cuts, it's not a system thing as much as it is investors. They know it's coming. So investor sentiment, as they start to make changes in the way that they invest, you start to see those bond yields move ahead of a cut. And then so mortgage rates will trickle down ahead of a cut. So when the Fed cuts the federal funds rate, which is the bank, the rate that the rates that the banks borrow money from the Fed, you won't necessarily see a cut on the mortgage side. We've actually seen times where Feds cut rates and mortgage rates have gone up. I don't think that that's this scenario this time around. There's so many other factors that play into it. Inflation is a huge, huge factor in mortgage rates. Inflation is continually showing us that it's trickling down. We had a hiccup last month in July, and we saw a little bump up. And now we've corrected that, and we've even corrected even lower from those July numbers. And they've They've re-reported the job data and those sorts of things. So we really, really good week in mortgage rates last week, and they've held their own. It used to be you see a good week and you just holding your breath. It's going to flip right back up. But here we are, middle of the following week. Mortgage rates are still holding their own. Those treasury yields are still holding their own. Look, we're not in. First off, guys, 2020 is an anomaly. 2020, 2021, those rates, that should have never happened. I don't think we'll ever see those rates again, certainly in our lifetimes, as we all sit here live from the senior center on our podcast. I don't think we'll ever see those rates again. But we need to start thinking more four-ish. 4 to 5 is a great rate historically. And we're getting there. This past week, just kind of give you guys what we're looking at. I've locked anything from mid 5s to upper 5s on government loans. So that's your FHA, your rural development, your VA. And then on conventional, I've locked anything from, low to mid 6s. So that's one of those deals. Dang it.
Somewhere between 5.5 and 6.5.
Yeah. That's so we're right there, which is a good place to be. It's not great, Ben. And I'll let you guys kind of talk about. We have other things in the market right now that are situational that we can't control. That are going to cause it to.
What we need to have a balance, like you talked about the 2.75 rates that people were getting in 2021 during COVID. That creates a surge in buyers, a lack of supply in sellers, and it skews everything. We need to find a balance, because right now we supposedly have 500,000 more buyers more property listed than we have buyers available for those properties nationwide. Right. And that's the first time that number's ever hit 500,000. So as the interest rates come down, more buyers will get in the game. But we're better off with a balanced market than we are with a super hot or super cold market. And I used to say that number was about 7%, because historically 7% was a good number. I think we become jaded, and that balance might be 6% now for a period of time, and it may go up or down from there. With a balanced market, it's just better for both buyers and sellers when we're not hot or cold. Agreed. It's just Ben's opinion.
Yeah, no, I agree.
Clint, got anything to add to that?
Yeah, I mean, you're right in that historically it's, for the last 20 years, the historical average has been roughly right around 7%, getting down to about 6, maybe a little bit below. That would be awesome. Mm-hmm. But again, people's memories are short term. They only look at what happened in the last year or two,
Right.
Rates had got down so low because of an abnormal situation and reactions to those situations so people say, well, I'm not going to do anything because I'm waiting for it to get back to that. We have to explain to people, say, it's not going back to that. So where the real issue is coming in is the people that bought during that time that, or maybe would normally think about, say, hey, I'm going to sell, I'm going to upgrade. I'm ready to move on to something different, but I don't want to give up this rate that I've got, right. And it's like, well, there's other things to consider. And I think that as we get closer to a lower rate, what we're seeing now, it'll be a little bit more acceptable to them to, maybe closer to 5.5. They say, okay, I can accept that if I need to sell my house that's at this 2.75 and then go buy at a 5.5.
But I tell people that people will ask me, Ben, what's the rates today? And I'll say 6% plus or minus, and they beat their chest and said, well, I got one at 2.75. I said, congratulations. I hope you like your house.
Correct.
Because you're not going to be able to sell it. You won't allow yourself to sell that house.
Correct.
Something catastrophic will have to happen for you to sell the house.
Yeah, leaving town, right?
Right.
addition of a family or something like that. But outside of that, you're almost trapped.
Right.
With that rate to make it make sense, right? So, and that's part of I guess you guys are seeing with the staleness in the market as well, is people not having, they want to feel like they have to move to lose that 2-3% interest rate, correct?
Right.
But we're making progress. There's a lot more politics involved in mortgage rates than I wish that there would be, but we're definitely making progress. So the Fed's gonna, I think, without a shadow of a doubt, they're gonna cut rates. I think it's the 20th, or it's in a couple of weeks. Maybe Wednesday after next, or maybe next Wednesday. Anyway, the Fed's gonna cut rates. We just don't know. Hey, is it gonna be an eighth? Is it gonna be a quarter? Is it gonna be a half? It's gonna be 3/8. We don't know what they're gonna do. All signs point to 1/4%, which is kind of what we've seen in our numbers over the last week or so. So that's what makes me think that the investors think that it's going to be 1/4%.
Yeah.
So look, we're finally going in the right direction. I can remember around this time 2 years ago, I was quoting 8% on a conventional loan. Those were those.
You're probably doing a lot of quoting and not a lot of writing.
A lot of quoting and not a. That's correct. That's correct. And it was short lived, but it was dark days. That if I remember correctly, it was fourth quarter of 2023. It was. It was gloomy, man. And then, we kind of had a little movement. And then when it got back in the low sevens, it didn't seem so bad anymore. And then the market kind of moved a little bit.
Right. Yeah. Yeah. So I tell people that are waiting for the interest rates to go down, unless you're living in mama's basement, you're still paying that same interest rate, if not higher, if you're renting an apartment or a house.
Correct.
So it's all relative. If you're paying money to live somewhere, you're better off buying. And with the products that Mike has, you can absolutely buy a house for less cash than you can rent an apartment for.
Yes.
Less cash up front. Like, hands down, no doubt. I've told Clint a couple of times, there's some tract builders, if I'm obviously past the first time home buyer age, but if I'd be coming out right now, I would go to one of those tract built houses and get the best deal I could find. I wouldn't even need to walk into the house. Get the best deal, the lowest interest rate, the most closing costs, whatever they're offering, and buy it. And then make it a house, make it your home. Live there for 3 to 5 years while you figure it out. And when they finish building the subdivision, you'll get some appreciation. You turn around and sell it to somebody like you were 3 to 5 years ago and move on to something else. But that's a whole lot cheaper than renting something.
Definitely.
Anyway,
and if you're still living in mama's basement, it's worth buying a house just to keep your feet dry, especially around.
I mean, it depends on mama, but I'm sure I would assume you want mama, not as many opinions from mama as well, right?
Right. If you're in mama's basement, you need to move out anyway.
Speak from how my kids' opinion would be of that, right? Yeah. So mama wants to know why you came home late last night and you're 35, so for sure.
Yeah.
For sure.
So tell us about the some low or no down payment loans.
So obviously we do all of the FHA, VA, rural development. I have conventional, I have jumbo, I have DSCR, which is an investment property loan that requires no income documentation. Construction loans, we have the whole package, right? One of the things as a federally chartered bank, we are required to serve our entire community. And with that being said, MMCT, which is the Major Minority Census Tract, which in Houma Thibodeau is a small slither of area. So it's really hard to meet the goals for that, right? So one of the things the bank has done to make sure that we can get to those goals is we're offering up a program. I'm going to grab some notes here because this is like hot off the presses. We were just releasing it now. So this is going to be a completely in-house bank product, what we call a portfolio product. It's 100% financing, so zero money down. There's going to be no PMI on 100% finance product, which is unheard of. So there's no PMI. Right now, the rate, I looked at the rate before I hopped on. The rate today was 5.75. So portfolio, essentially a conventional product, right? But it's a portfolio product, 100% financing, no PMI, 5.75 interest rate, and a $5,000 lender credit towards your closing costs. And that's in any of these MMCT areas in the Houma area. And then Slidell, New Orleans, Gulfport, Tampa. So this is a huge, huge benefit to someone who's actually has a property in mind in those areas. Also, if it's not, we also have something to help borrowers what we call LMI, low to moderate income buyers. So if a buyer makes less than $60,500 a year annual income, give or take a couple dollars there, we're offering a $3,000 lender credit no matter what type of loan they use. And then, of course, that $5,000 credit in an MMCT, regardless of loan type. So if we have a buyer who's low to moderate income, but they have a big down payment, they don't need our 100% financing, they want to put the money down, they would still get the $5,000 lender credit in the MMCT area. So that's really, really huge, man, at a time when, things are tight.
Just to give you an idea, the MMCT tracks are not necessarily what you would think they are. It's designed to go for underprivileged people. The tract that runs through Thibodaux runs from St. Charles Street, where it hits Canal, basically up Canal, and then towards the east into Nichols.
Yes.
And that's some of the hottest real estate properties in the city of Thibodaux, in or around it. That's the Golden Mile. So it's kind of strange that you have these benefits. This 100% loan with the $5,000 is regardless of income, if I'm not mistaken. Mike,
regardless of income,
the property is in
MMCT. Yeah. So the only caveat, max loan amount of $475. But outside of that, yes, there's no income restrictions.
So don't assume you know where the properties are located is my point.
Correct.
If you're interested in a property, find out what census tract it's in.
Right.
Correct.
And that was going to be the thing I was going to point out, is that these are based on census tracts and results of the census.
Correct. So this is, and look, 2026 census will come out. The MMCT areas are going to shift and expand in Houma if we get some good census data. I mean, you guys know how that works. But because, so like in the Houma area, you're looking at east side along the Intracoastal, between the Twin Spans and the tunnel, back out towards Grand Caillou Road. If you're familiar with Houma, pretty much all down East Main, all the way to Prospect in that area. And which was, Mechanicville. And then, so Mechanicville, Deggville, like that old East Houma by Honduras School. And then from Woodlawn Ranch Road south to Dulac. So all of Dulac, Grand Caillou Dulac is all in it. So it's a great product if it fits, right? It's a great product. And it's just one more thing to add to the mix. Look, we have everything from a loan for a physician who's coming out of school. It's 100% financing with no MI, to someone who's a low to moderate income borrower who needs help, with closing costs and needs help, with approval. So we pretty much have it all. We want to make sure we meet the needs of every person. And look, what I'm most proud of is that we do that with the most competitive rates and fees that I've seen, since I've been in the industry, which is amazing. And we do all that, under the umbrella of Hancock Whitney, which is, a solid company. You know that when you're dealing with us, you're safe, you're secure. It's next level, man, and I'm really proud to be a part of the organization for sure.
Okay, so the like I said before, it's cheaper to buy the house than it is to rent it. Mike's contacts all over online. If you want to put it out there, Mike, we can tell them how to get in touch with you and give you a call, and y'all can sit down and talk about it.
Well, again, being that I'm old, I'm going to give you my phone number, but it's 985-688-0155. That's my personal cell. It's 24/7, 365, guys. I work like these guys, like the realtors work. You guys need us after hours and on weekends, and so that's how we work. And then also, Facebook, Instagram, Twitter, all that stuff. Everything's Mike Domangue, just my name.
Okay.
Applywithmike.com,
There you go.
Want to complete the application. I'm sorry, applywithmikenow.com. Yeah. Don't go to the other one. That's another guy. He's like in Michigan.
Hey, that's another Mike.
Yeah, that's another Mike. Yeah. Yeah, little known fact, I'm
play.
actually also Clint, right? I don't know,
Right.
So, I'm also, my name is actually Clint. I just go by Mike, which is my middle name. So, yeah.
I didn't know that. You didn't know my middle name is Ben.
Really? So what's your first name?
Thomas.
Thomas. All right. Yeah.
You
Were
learn
you a
something new
junior?
every day.
Is that why? Or
No, I'm named after a great uncle with that
Okay.
name who they called Ben. I have no idea how that happened.
Wild.
No idea how
Yeah.
that happened. But
When I was
Alright, so
younger, I
total-
changed my name. Like I was like, I want to be Mike because everyone was calling me by like either Clint Jr. or Clint Michael, like the whole thing together, where blended together. It was like Clint Michael. So I changed my name to Mike. But now that I'm older, Clint sounds cooler. I mean, outside. I mean, obviously, present company excluded. But
Yeah.
Yeah.
Well, since y'all said y'all middle names, my middle name's Jeremy.
There you go. And tell us where you're from, Clint.
I'm from Dougherty, Louisiana.
Nah, show me where that is on the map.
Same thing I said the first time I heard it. That's where the duck gets his name from.
All right. So,
Yeah.
So you know where Fouchon's at?
Yep.
All right. So the road that goes to Grand Isle from Fouchon, it's
Mhm.
about a mile past Fouchon Road.
Okay.
All I got left now is a couple of mobile homes on pilings and a A-frame camp and a cell phone tower in that area.
So
Everything
literally
else is gone.
the signs with the coming and going on the same sign, front and back, that's Dougherty.
I mean, I figured it was Lower Lafourche with the last name Galliano and a middle name of Jeremy.
Yep.
Okay.
Yeah. Okay.
For sure.
All right. Well, Mike, we appreciate you coming on. It's been good. We've been wanting to have a guest for a while, and check it out. And we appreciate your time yesterday going through the trial run to make sure we can pull this off.
Yes, sir.
So if you need a loan, apply with MikeNow.com.
There we go. Yeah.
Search for Mike Domangue with an A online with Hancock Whitney, and I'm sure he'll pop up.
Sure will.
Hey, you should also apply with MagicMikeNow.com.
That's a good one. He said you ought to register apply with Magic Mike Now.
That's oh my God.
All right, we ought to wrap it up before we all get in trouble.
I've heard it a few times, Clint. Unfortunately, believe me. It's usually someone's mama. Yeah. Yeah. For sure. No doubt.
All right,
guys.
I'm gonna say subscribe, follow. What else we need to do, Clint? Like, share.
Like, subscribe, comment, share with your friends. RERealestatePodcast.com. You can watch the videos. You can subscribe with your favorite podcast apps. All the fun stuff. You can ask a question. You can do it all there from RERealestatePodcast.com.
All right. Mike, we appreciate you joining us today.
Thanks, gentlemen. Appreciate y'all having me.
All right.
Yeah, thank you, Mike. It's another one in the can.
All right. Y'all have a good one. See you later, Clint.
You too.
See y'all later.
See y'all, guys.
While we may discuss topics such as lending, interest rates, title law, real estate law, and appraisals in addition to real estate sales and transactions, please remember that we are only trained and licensed as real estate salespeople in Louisiana. The information shared on this podcast is for general purposes only and should not be taken as legal or financial advice. We may be agents, but unless we have signed paperwork stating otherwise, we are not your agents.